Hello traders and welcome to another video review. Today is Wednesday, June 3rd, 2026. Let's take a look at the economic calendar for today. So what do we have here? As you can see, only the very important, high important data releases are on my calendar. All of those data releases are from the USA, and those data are ADP non-farm employment change, scheduled for release at 2:15. Global services PMI data scheduled for release at 3:45. Non-manufacturing PMI data scheduled for release at 4 o'clock, and crude oil inventory is scheduled for release at 4:30. So the beginning of the US session might be very very good for the volatility traders, because all of this data releases might cause high volatility on the market. So please stay focused, stay vigilant the beginning of the US session. Now, without any further ado, let's switch to the charts, and we start with euro dollar. For our time frame chart of the euro dollar, doesn't do much. We went as high as 1.1656 in a recent swing. We retraced 50% of the last wave C to the downside in the previous swing, and the highest swing during this movement to the upside. Nevertheless, this upside movement looks still like it is corrective in nature, so downside is rather preferred these days, because momentum is still negative, 41 points only. The bulls have a problem to rally more than 50% of the last downswing retracement. So please keep an eye on the wave C low at 1.1577. We might see a test of this level or even a breakout quite soon. Cable doesn't actually do anything new. We just stuck in the middle of the range between the high of the wave B, 1.3508, and the recent lows, 1.3366. So right now, even the momentum is barely breaking the level of 50, now 46, 47 points. Volatility is very limited, so not much is going on here on the Bitcoin. Nevertheless, so on the cable, obviously Bitcoin will be later. So right now we just keep an eye on this current situation. Maybe the wave C to the downside is still waiting to be unfolded. US dollar versus the Japanese yen keeps moving higher just as expected. Next target 160.04 looks like it is being tested these days. Then eventually technical resistance at 160.50 is next, and the swing high from the April, the last days of the April, 160.73 is up for the text as well. So right now 159.64 will act as the technical support. So we change the color, there you go, it's a green. And the bulls are relentless, keep moving higher. Momentum is quite good, 74 points, extremely oversold conditions, strong momentum, quite good for the bulls, not quite good for the bears, as you can see. So this push to the upside is still being continued, despite the fact that we've seen very strong and aggressive down swings at the beginning of the May, end of the April. Doesn't matter these days. At the beginning of the June, we are pushing higher, bulls especially. Gold. The gold market is approaching the local technical support at 4,447. Momentum is negative, 40 points right now. So we barely went to the level of 62 during the test of the lower channel line, or the bearish F flag, or bearish flag of the bearish F pattern. And now the gold is looking quite weak. Any breakout below this level might even take us lower towards 4,366. This is the low from the end of the May, and we might see further deterioration on the gold, because as you can see, if we take a look from the bigger perspective, the wave Y to the downside has not been still completed, and we might see way lower levels soon as the wave Y to the downside expands. Let me just switch to the daily so you can see that this situation here, this movement to the downside, is the biggest correction in time and price since the swing high located at 5,597, which is why it might take some time for the complex corrective structure WXY. So it's a double tree to complete, right? So right now we still have negative momentum on the daily time frame chart, still unfinished wave Y to the downside. Bears are in charge temporary on the gold chart. In the background, before the swing high was made, of course, there is an uptrend. S&P 500, look at this. What is going on? This is the end of the March 2026, the whole May, the beginning of the June. Keep moving higher. On the recent movement to the upside, S&P 500 tested the swing high at 7,620. Right now it's consolidating the recent gains below this level. Next target, obviously, the obvious next target for the S&P 500 is 8,000 points level, because it's psychological number, round number. 8,000 points, and the market keeps moving higher. The momentum doesn't even drop below the level of 40, and they recently didn't even drop below the level of 50 or 47 was the lowest reading for the RSI with standard settings. So pretty much bulls are in charge of the S&P 500, and there is no indication of this option to be reversed or terminated or something like this. Bulls in charge of the S&P 500. And the crude oil, after basically we can say filling the gap, the retail gap, is breaking higher yet again. Local high 96.02. We broke above this technical resistance with strong momentum. Next target above $100, which is 102.58. So again, the same situation is being played out in the crude oil, up towards 110, 111, down towards below the 90, up towards 110, down below the 90, and so on and so on. So we are, as you can see, there is some kind of a pattern that goes from the extremely oversold conditions, extremely overbought, extremely oversold, extremely overbought, extremely oversold. Now guess the pattern. If history repeats, next level should be roughly around here, maybe a little bit lower, but we should hit the extremely overbought conditions before the market would go lower. And the carnage on the Bitcoin continues. The Bitcoin is down more than, it will be 20%. There you go, 21.19%. Big reading to the downside. 10 points on RSI in standard settings on 4-hour time frame chart I have not seen in months. Very important situation. Let's see the daily. As you can see, the daily minus 22 points. The lowest level is the reading on 16 points when we hit the level of $60,000 exactly. So we are already hitting extremely oversold conditions, but according to our plan, it looks like the bearish flag, or the second bearish flag, or F pattern, bearish F pattern, you can see here the F, the letter F here, is a very strong indication of a bears in control of this market, especially after the supply zone and technical resistance has been rejected. You found it here. We've been speaking about it for weeks. When the market was trying to break above this level, they failed, and now those are the consequences. Bitcoin is being massively dumped all over the place, minus 21% from this swing high after the rejection of the technical resistance. So the current situation here looks very bearish, despite the fact that the levels are extremely oversold. We might see another plunge to the downside, basically. Okay, so please keep an eye on the current chart. We are already minus 21.19% down from the swing high at 82,850. It might not be the end of the downside movement. That's my current take. Let me just change these levels here for the technical resistance, because they absolutely change the way they are right now being treated. I will just remove some of them because they need to be updated to the current levels. So possibly this one will be quite helpful, 69,300, and obviously this one, 65,038, is quite helpful. Nevertheless, we didn't actually hit this level, but we might do it soon. So anyway, plunge or carnage on Bitcoin is still in place. Keep an eye on the current situation. It might not be the end despite the extremely oversold conditions. Short-term relief rally is welcome, but if we are not back above $75,000, we cannot say the bulls are back. The bears are in charge of the market and they might push the prices even lower. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.